let's get right to today's market action. We got a lot to talk about, including Facebook, with Joe Keating of Center State Bank telling us why you should stick with high-quality dividend payers. Tom Lydon of Global Trends breaks down the three sectors that are outperforming and how you play them. And Larry Shover joining us from the CME. Larry, it's a terrific day today. What is spurring the optimism?
You know, that's a great question. I mean, let's consider the fact that really no great news came out today. 9 days ago, we were trading 160 points lower. It's something that I've been saying ever since May 20th up until September 23rd. This market is ruled by sentiment right now. What fundamentals have really changed? I mean, it's not what has happened, it's what has not happened. I mean, earnings season, no worse than feared. Economic data, no worse than feared. Ebola, a terrible thing, but no worse than feared. So the market snaps back. Here we have a 9% rally on our hands. Right now, traders behind me are befuddled and thinking we should fade this move like they've been doing all year long and been getting chopped up in the process.
Now, we just want to let people know that the Facebook numbers are out and the market is digesting them, as are we. We want to get you the exact and correct numbers. We can put up the stock reaction here. And Cheryl Casoni has those numbers. Cheryl.
All right, Liz and Dave, yeah, here's what we're looking at right now. It is a beat. Earnings per share, the estimate was for 40 cents, and the number coming in at 43 cents. Revenue, barely a beat, but a decent beat. 3.12 billion was the estimate. 3.2 billion is the actual number. In the last month, the quarter, those daily active users, I know you were talking about that earlier with your guest, Liz, 864 million is the number here. Also, we're looking for some other things. Mobile advertising revenue represented 66% of ad revenue. That is a good number. That is a good number. That is a build for Facebook. Also, third quarter revenue from advertising, something else that your guest mentioned, 2.96 billion. That is the initial numbers that we're seeing here. But again, this is what matters. Daily active users in the last month of the quarter, 864 million. It matters if people are on Facebook or they are not. Also, the operating margin about 44%. So it looks like for mobile advertising revenue, that was about 66% of ad revenue for the entire third quarter. That is a nice jump. Quarter to quarter, that is a big jump year over year on these numbers, Liz and Dave. So as expected, a very strong quarter from Facebook.
Mobile monthly active users. I just want to let people know this. We're 1.12 billion as of September 30th. That is an increase of 29%. Mobile truly matters, does it not? And as we look at these numbers, Joe Keating, to see Facebook at the moment, it's straddling the line of where it closed. So you might not get a huge bump until we start hearing from the conference call and Mark Zuckerberg and Sheryl Sandberg. But what do you make of this?
Well, Facebook is becoming a dominant player in the mobile space, and so in the social media space. So I think investors are looking at this sort of the report beating, and they want to be behind the stock. They're looking at it really long term, Liz, not short term.
I want to go back to Larry for a second, because I know, Larry, you've been keeping a key eye on Facebook. These numbers, at first, by the way, the market digested it poorly, the numbers. It was down about 4%. Now it looks like it's gaining after hours. Where do you think it trades tomorrow?
I think it's going to trade up because it's one company that controls its destiny. I mean, there is a little bit of a risk premium in the stock. I mean, the consensus thinks it's a $90, $95 stock. However, are they going to continue to be able to have this mobile ad revenue grow by these triple-digit numbers? I mean, are they going to be able to monetize Instagram and video? It's something really big, but they need to monetize it. That said, people say, well, why isn't it trading at 95 right now? These are the questions that when they're answered, we'll see that stock either trade at 90, 95 or not. But boy, what a company that's controlling its destiny. Blue skies ahead.
Okay, can I just tell you that we are looking at 52 million shares and about 2 million traded in the volume in the past, I don't know, 58 seconds or something, David. So throughout the day, this was heavily traded, and now we see it climbing and climbing at the moment. So it is extremely active. But again, we do want to stress the stock is flat. Let me go to Tom Lydon. Whether you're looking at the social media implications of this, this is a newer name, and it gives sort of a salubrious effect to the markets in a way when you've got entrepreneurs doing well. We know that America is trying to find its footing when it comes to an economic comeback. What does this message send?
Well, with social media, you know, Liz, you live and die by the sword. I mean, after a tough start a couple years ago, Facebook really has been moving. As you point out, it's all about mobile. It's all about mobile ads, and revenues continue to increase. Users continue to increase. But for the average investor out there, it's a little bit, makes your heart palpitate a little bit with all the ups and downs with Twitter and Facebook. I think there's some other areas, specifically biotech, healthcare, and housing, that has really bounced back strong since October 15th low. And if you look at those sectors specifically in ETFs, they've done very, very well, actually grabbed back a heck of a lot more than some of the other sectors.
Okay, and we should mention, by the way, Tom is an ETF guy, so if you like to take the whole basket of goods, you follow Tom's advice. Joe, I want to go back to a figure that we got early today, which was the consumer sentiment number. A very good number, particularly looking forward to the holidays and Christmas shopping. Does that change you? Does that make you more bullish than you may have been without it?
It's basically, we stay in line with it, David. You know, the market is basically responding to really solid fundamentals. Growth in the economy is moderate, but adequate. It's adequate enough to basically give us third quarter operating earnings that are going to be up 10 to 12% year over year. And if anybody had any fears about the Federal Reserve acting too quickly or too aggressively, I think the events of the past month have kind of washed that to the side.
Well, hold on a second. Let me just be
aggressively.
specific about what you're saying. You're saying that because of the good consumer numbers, we are not going to see an extension of QE. You think they will stop their bond buying tomorrow?
David, I think they will definitely stop the bond buying tomorrow. It has not been all that effective other than raising asset prices. And so I think they really want to put that to bed. And then they want to look to the inevitable rise in short-term interest rates. But going back to my previous point, they will do that in a manner that absolutely does not hurt the U.S. economy. They cannot hurt the U.S. economy as they attempt to raise rates, or else they'll fail and they'll push us back into recession.
Okay, quick note here. Now we have Facebook trading about $2 lower than where it closed. But I want to stay on the Fed issue here, and Larry Shover, to talk about what the Fed's going to do tomorrow is different than what the Fed will do tomorrow. I am just wondering, are we underestimating, even though we all know that the market is well telegraphed that they will end bond buying purchases, that something will happen tomorrow that will feel like indigestion for the markets when that actually does happen? And might we see a sell-off tomorrow?
You know, we could see a sell-off in the market, but I don't think it's going to be because of the Fed, because not only has it been well telegraphed, it's also well priced in. And quite frankly, when we look at like the U.S. Treasury, the euro-dollar market, and even the stock market to some degree, it's kind of becoming like half-baked old news that people are just assuming it's prerogative that's ending tomorrow. I think what's more important is the language around the zero interest rate policy, which will remain in place. And most traders know that language probably won't change until December, once we get through the next unemployment figures that come out. That said, yeah, could we have a sell-off? Absolutely, but not because of the Fed.
All right. By the way, we want you to know, folks, we've got a lot more on Facebook coming up. We've got a special analyst who's been looking at all the details, thinks Facebook should be trading at about $90 a share right now. We'll be going to him after a break.
Okay, thank you, Joe Keating, Tom Lydon, and, of course, Larry Shover. Good to see you all.